Okay, so now let's try to understand about write-off for accounts receivable through an example. So we know that there is a company whose name is Walmart, and they determined that $2,000 of receivables from a small supplier cannot be collected because the supplier has become bankrupt. Now, how do we account for this entry? Because we know that now the debtors or accounts receivable will get reduced. We know that. So when we know that, we credit the accounts receivable. Why? Because when our assets reduces, then we credit it. So we have credited that. And what we will be debiting? Since we make the provision for allowance account, we will be using that provision for allowance account, which is our $2,000 in this case. So we'll be debiting it. And why? Because we debit our expenses and losses, so that will be debited here. This only uses when we use the accounts, or I can say allowance for provision account. When we don't create allowance for provision account, we don't use this entry. But right now, this concept which we are discussing, this is based upon assumption that we are doing allowance for doubtful accounts created. Now, the same thing has been written in the note here as well, that no additional bad debt expenses recorded. Why? Because the loss was already anticipated in the allowance account. We have already created the account. So this entry will be passed. Now see the same thing within the textbook. What does the textbook says? So textbook again say that when it is determined that a particular accounts receivable cannot be collected, the account is written off. We will write off that account. And accounting treatment will be simple. Allowance for doubtful debts is debited because we will be reducing our allowance balance. Basically, we will be saying allowance is an expense for us. And accounts receivable will be credited because we know that it won't be received, and when the assets are reducing, we credit that. That is the golden rule of accounting, that assets increases, we debit them, asset decreases, we credit them. The accounting entry what we saw above was debiting the allowance for doubtful debts and crediting the accounts receivable, which is here. And the key important point here is like writing off a receivable does not affect the bad debt expense. Why it don't affect the bad debt expense? Because we have already created the allowance account from the bad debt what we have. So basically this concept which we have seen and learned in the previous sessions, this is due to that because we have already created allowance account. I hope you understand this.